Hey everybody, John Duncan here. I want to talk about stock market 2019. Are the new record highs a mirage? And what I'm talking about is what is really fueling the record highs in the S&P 500 and the Dow and many stocks. Um, it used to be in the market that it was all about, the companies, that the individual companies and how they're performing. And what I'm going to share on this video is some things that you may not have ever thought of, but are some real drivers of this economy. So I'm going to talk about the stock market 2019, and are the new records that are being set a mirage? And let's get started with that. So, what is actually driving this crazy upward trend in the stock market? And one of the primary drivers that a lot of people never really consider is the unrelenting additional money being added to the money supply. And this year alone, we're at about $700 billion of new money that's been added to the money supply. And if you go back in history, when we went off the gold standard in 1971, uh, since then, the money supply has increased roughly 33 times, 33 fold over what it was in 71. And guess what the market change has been? Roughly 32 fold. So, what am I saying? A big concern of mine right now is how, essentially the market is being driven by the new capital coming in. So, it's really more of a reflection of the loss in purchasing power of the dollar. It's a lot like a home. Homes don't really appreciate. It's actually the money itself depreciates because more and more dollars are being added. So, will the market continue to go up and up? Well, there is a strong argument for that. Why? Because not only in America, but across the world, interest rates are, I just posted a thing yesterday. We're at worldwide $12.5 trillion in bonds that are set for negative return. So money has gotten ultra cheap because they can't create enough of it fast enough. So ultra cheap money, as long as that continues, the markets will reflect, if nothing else, the devaluation of, or the loss of purchasing power of the thing we're ranking the market with, which is money. So a lot of times people look at their statements and think, "Oh my gosh, the markets went up. I've made so much more money." And a lot of times, if you really boil it back down, really the money, the thing that they're using to calculate whether they made something, is itself losing value. So, as long as that trend continues, as long as money continues to be created out of thin air, you're going to see the markets continue to rise. Um, what would cause a crash? Well, if lending, if interest rates went up, lending goes down, free money or monopoly money slows down, and markets, as you saw just today, just the thought that the Fed may not lower rates caused the market to drop substantially. Not huge, but obviously it's drastically affected by how low the interest rates are, which in turn determines how many new dollars can enter into the money supply. So the money supply itself is the hidden element that you need to watch. The second thing that you should watch on that is the interest rates themselves, because if interest rates, for whatever reason, went up significantly, it would definitely lower borrowing, which is how 97% of dollars get into the marketplace. It would lower the new dollars coming in, which would in turn impact the markets in a negative direction. What I believe, just a prediction, is that because many other countries are sticking to a very, very zero interest rate environment, if you will, and even a lot of them are considering more quantitative easing, which is just relaxing the monetary policy even further, that America will follow suit with that, and the markets will continue to rise based on that. However, if monetary policy changes and interest rates start to rise again, etc., you're going to see a big market correction. I mean, a big warning sign right now for all things investment related is the fact that we are in a booming economy, record unemployment, companies are growing. And even in that, we've already went over $1 trillion this year as the federal government. Over $1 trillion more has been spent than is coming in tax revenue. So there are some huge red flags out there. So bottom line is that in the stock market 2019, the real driver is how much new money is being created. And right now, the world is wanting to create money at a faster pace than ever. So with that said, the potential for the market value to rise is really good. If there is a problem with lending or interest rates and so forth, look for the market to go the other way real fast. So with that, John Duncan, hope you're having a great day. I'll talk to you soon.